How's it going, everybody? Welcome your faces back to another Satoshi Club video, where today I'm going to explain the gold standard for you and how it is related to cryptocurrencies. What type of similarities can we see between the gold standard and crypto? What type of differences we can see, and how the gold standard relates to fiat currencies. So without further ado, we're going to get into it, and at the end of the video I'm going to conduct some technical analysis on gold itself so you can have a little prediction for the near term and potentially longer term future as well. So let's get into it. The gold standard is a monetary system where a country's currency or paper money has a value directly linked to gold. With the gold standard, countries agreed to convert paper money into a fixed amount of gold, and that's basically what backs this paper money. So the same as, having a dollar backed stablecoin in cryptocurrency, you had a dollar backed by gold back in the day until the 1930s, where countries just started discontinuing it because they preferred to be able to set their own rates based on their economic and macroeconomic goals. Now, the gold standard is not currently used by any government. Britain stopped using it in 1931 and the US followed in 1933, but the gold standard was quite efficient back in the day. However, it did get replaced by fiat money, a term used to describe currency that is used because of a government's order, government printing it, and government choosing their own monetary policies. So for instance, in the US, the dollar is fiat money, and for Nigeria, it is the naira. The appeal of a gold standard is that it arrests control of the issuance of money out of the hands of imperfect human beings. So this means that the only thing actually adjusting the amount of money in the economy is the amount of gold that each economy has. And the goal of monetary policy in general is not just to prevent inflation, but also deflation, and to help promote a stable monetary environment in which full employment can be achieved, which is one of the shortcomings of the gold standard itself, because with the gold standard you did beat inflation, however you didn't really beat deflation, and you need to have a macroeconomic machine that works, such as a scale that's going to balance out everything going on, and it's simply not possible only using a gold standard. So the gold standard versus the fiat system is a little bit contrasting, right? The gold standard refers to a monetary system in which the currency is based on gold, but on the other hand, a fiat system is a monetary system in which the value of a currency is not based on any physical commodity, but is instead allowed to fluctuate dynamically against other currencies on the foreign exchange markets. In the decades before World War I, international trade was conducted based on what has come to be known as the classical gold standard, where trade between nations was settled using physical gold, and nations with trade surpluses accumulated gold as a payment for their exports. Now, one thing you need to know about fiat systems right now and exchange rates is that there is fixed and floating exchange rates. Fixed means it's nominal and is set firmly by the monetary authority with respect to a foreign currency or basket of foreign currencies, so to say, pegged to a different currency, like a lot of currencies currently are pegged to the dollar or the euro. And you also have a floating exchange rate, which is determined by foreign exchange markets and basically market forces depending on demand and supply. Now, how is a Bitcoin system similar and unlike a gold standard? Pretty interesting read. I'm going to drop it in the comments below. If you enjoyed the video so far, drop a like and subscribe to the channel. It means a lot, and you're going to learn a few new things every day. Now, a lot of commentators have compared Bitcoin to gold as an investment asset. Bitcoin is increasingly set to replace gold as a hedge against uncertainty, suggests a Cointelegraph reporter. However, let's skip all the dabble over here. In what important respects are the Bitcoin system and the gold standard similar, and in what other important respects are they different? Let's dive straight into it. Similarities and differences, right? First of all, the first similarity that we can see is that both Bitcoin and gold are stateless, right? Either one or another can provide an internationally based money that is not the creature of any national bank or finance ministry. You could say that gold is decentralized because, it is, created on a lot of different places in the world, and there is a way to stimulate people around the world who are mining gold, and that's the one difference between cryptocurrencies and gold. Actually, it's not as dependent. Bitcoin is not as dependent on supply as gold is right now, and on market forces, but I'm going to explain this in a second or two. Second of all, both provide a base money that is reliably limited in quantity, which means that unlike a fiat money that a central bank can create in quantity likes out of thin air, like the Fed did during this whole period after 2020 started, printing of money is a big problem in some cases because it does increase economic growth, but it also increases inflation. So as I said, everything is always a scale in economics. Now, gold is a tangible physical commodity, right? Bitcoin is a purely digital asset. That's one of the key differences, as ownership or claims of either asset can actually be transferred online or in person by phone, app, or card. It is actually pretty similar between these two. So you can transfer Bitcoin on your phone, but you can also buy and sell gold on your phone as well, unless you're actually getting the real gold blocks or jewelry and selling it to real jewelers out there. Now, the front ends of payments are basically the same nowadays, but the back ends can be a little bit different. Gold payments can go peer-to-peer without third-party involvement only when physical coin or bar is handed over. Electronic gold payments require a trusted vault-keeping intermediary. However, on the other hand, Bitcoin payments operate on a distributed ledger and can go peer-to-peer electronically without the help of a financial institution. The most important difference between Bitcoin and gold lies in their contrasting supply and demand mechanisms. This is something I'm going to explain to you right now. So the annual production of gold has been a small percentage, typically 1 to 4% of the existing stock, but not zero, right? Very important. The total stock of gold grows over time, okay? So we have an increasing supply over time. The number of Bitcoin in circulation was programmed to expand at 4% in 2017, but the expansion rate is programmed to fall progressively in the future and to reach zero in 2140. Now, we could see why Bitcoin, when it exhibits this mild secular growth in its purchasing power, and we also see mild deflation in Bitcoin denominated prices of goods and services as a result of this. The key difference here is that it's really small, right? In real economic welfare, consequences between a money stock that steadily grows 3% per year and one that grows 0% per year, it's small, right? As long as they're not falling. The key difference in the supply mechanisms, though, is in the induced variation in the rate of production of monetary gold in response to its purchasing power, by contrast to the non-variation in Bitcoin. So what this means is that the supply curve for Bitcoin is always vertical and only moved because of these shifts in supply, until it stops at 21 million units. But by contrast, a non-transitory rise in the purchasing power of gold brings about small incentives for people to actually start producing gold, selling their gold, melting their gold, because as a rise in purchasing power of gold happens, people realize that their gold can be worth a lot more, and then they go ahead and they sell their gold, right, while it's up, and then when the gold falls in price, they buy more gold. So gold is kind of a market force, right? It's very simple, and it makes people buy and sell, being sort of a self-regulating mechanism, or should I just say a market force, right? It's stimulated by market forces. It is economics 101, and it is quite similar to Bitcoin, except there is one problem with Bitcoin, where because its quantity is pre-programmed, the stock of Bitcoin is free from supply shocks. And this doesn't have to be a negative thing, right? This can be a positive thing as well, because, having supply shocks, right, like gold has, means that it can be influenced, and the price of gold can be influenced by real life events and also by people. You can have a country ban gold or put a very high minimum price of gold, or some things like this that can change the whole outlook on how gold is, how people will buy and sell, and effectively the price of gold. So it can be manipulated, but it's not that easy, because the market cap of gold is around $10 trillion, whereas the market cap of crypto is less than 1 trillion at this point. Supply shocks from gold discoveries under the gold standard were historically small. However, it did happen back in the day during Californian and Australian gold rushes, but it is not really, it's negligible, right? Now, just for the last part of this video, how to predict the supply of gold and of cryptocurrencies. Well, the purchasing power of gold under the classical gold standard was more predictable, especially over 10 plus years horizons, than the purchasing power of the post-World War II fiat dollar has been under the Federal Reserve. Why? Because you have these human errors and human decision making in the Federal Reserve, right? Gold, it was predictable because you have people just reacting to it with simple market forces. It's simple supply and demand. It is the easiest chart that you can actually draw on your piece of paper, and you'll see that gold is actually adjusting to these economic movements pretty easily. Now, as this guy who created this article, which is pretty cool, let's give him Lawrence H. White, okay, as he said before, under the gold standard, a price level can be trusted not to wander far for the next 30 years because it's constrained by impersonal market forces. Any sizable price level increase caused by a reduced demand to hold gold would reduce the quantity of gold mined, thereby reversing the price level movement. So the same happens, if the price of gold increases, it increases demand to hold, to sell gold, and it just creates a reverse thing. Bitcoin lacks any such supply response, which could be actually good because it isn't purely market forces that are influencing it. But as Bitcoin grows, we're going to see what happens, and is it going to become more and more similar to gold itself. Now, for the last sentence in this article right here, before I get into gold technical analysis, it's an electronic version of gold, and the price variation should be a warning to economists who longed for a return to gold. So Bitcoin and gold are quite similar. Are they on the same level? Not really. There are a few differences. I hope it's more clear to you right now. And let's head on over into the price of gold. And one thing that I wanted to do right now is add I just have to find where this thing is. So if we actually just add a comparison, right? One second. So if we just add a comparison with Bitcoin, right? Let's just add Bitcoin to this gold chart. And what we can see right here is a comparison chart of Bitcoin and gold. However, it is automatic, and what we can see is the price of gold and the price of Bitcoin, which are not really too aligned, but they are kind of following each other, right? I'm gonna explain this in another video. I don't want to bore you with it right now, but in general, when it comes to the prices of gold, we can see that we do have a strong support level around the 1.6K level when it comes to gold. We also have a strong resistance forming right now around the $1,800 level because it is a round number. And if we do move on to the daily time frame, we can see, without the price of Bitcoin, we can see that we are sort of creating a reversal pattern on gold, and we may be seeing lower prices yet to come. Why? Because first of all, we do see a relative strength index divergence. Second of all, we do see a strong resistance being hit. Third of all, not really too much clean traffic. The only other place I can see gold going to is the $1,874 level, perhaps even the $1,900 level before we continue moving down. Now, I'm going to come back to you with some more analysis on gold and Bitcoin later on. I hope you enjoyed the video. Drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions. And lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or NFT world. So thanks for watching, and I'll see you guys in the next one.